All right, ladies and gentlemen, good evening. I usually say good morning, but good evening. Welcome to our Top Gun Options Trading the Fed brief. Took a little bit of a break today. Actually, I didn't take a break today. Shot a nice sniper for what, 1,200 bucks, 60% profit in 30 minutes. Did some other trades as well. I meant take a break to let the dust settle in the market so you all and I could get together and discuss, because we really did need to let the dust settle a little bit before we talked through everything. So, well, I should we should do more of these night things. Not going to go too long. We got football to watch. We got the Miami Dolphins to lose to I think Buffalo. I live down here in South Florida. I'm an Eagles fan, but the Dolphins suck. But welcome. This will be the replay page for tonight. I'll send out an email with the replay page. Obviously, what's on there right now is old because you're in here live right now, but that'll be the replay page and stuff like that. If you're new to Top Gun Options, welcome. Honored to have you. You should also be please subscribe to our YouTube channel. We're live streaming it right now on YouTube, and you can get I post all the public stuff on here as well. I have a lot of recent media stuff on here as well. Veteran Suicide, September Suicide Awareness Month. So been doing a lot of media hits about that, which is awesome. Just getting the word out to try and save lives, man. Just not only veterans, but obviously civilians as well. Many of you know we started an entheogenic church a couple months ago down here in Florida, Sacred Warrior Fellowship, where civilians can come join us and sit in ceremony and return home. Okay. So let's just go look. Let's look at the chart. Let's look at a chart first. Let's take a look at the S&P 500 yesterday. What's that quote? Is it Shakespeare or something? A lot of sound and fury signifying nothing. What is that? Somebody find that quote. But look at yesterday. Let me open this up a little bit. So at 2 o'clock yesterday afternoon, right there, see 1400. We're talking military time. 1400, the rate decision came out. 25 basis point cut. Man, I got so much to cover here and a little bit about that. Do you remember where we were? Speaking of the way we were, how about Robert Redford passing away? Couldn't stand his politics. Good actor. The Way We Were, played a former naval officer. Hubble, don't go, Hubble. Anyway, The Way We Were. The way we were last September, ladies and gentlemen, inflation had been going up for 4 months in a row. Joe, Kamala, the BLS, the Bureau of Labor Statistics, everything's great. The economy's great. Jobs are great. Everything's great. Okay. Everything's great. Everything's great. Everything's great. And inflation's going up. What did Jerome Powell do last September? This time last year, he cut 50 basis points. If anything, ladies and gentlemen, if everything's great and inflation's going up, he should have done what? He should have raised rates. If you were talking options member here last year, you remember me going absolutely ape shit. I'm like, is he insane? Didn't work out too well, right? Donald Trump got elected anyway. And what happened 2 weeks ago, a week and a half ago? The downward jobs revisions. 911,000 jobs. Did they evaporate? They were made up? It was a lie. The last year of the Biden presidency, it was the biggest downward jobs revision in the history of man. So I'm just setting a little bit of a stage here. We're going to talk through some stuff. We're going to look at a trade, but I got to walk you through my commit criteria. Wiz, the Fed is apolitical. They tell us that they're apolitical. Okay, don't take a leak on my leg and tell me it's raining. Anyway, breaking news: the Fed cut 25 basis points. Duh. What happened? This is algorithmic trading, ladies and gentlemen. We got a pop. And what are the lines on my chart? Let me get rid of this one. That's not a line that should be there. These are 25s. If you don't trade SPX, the S&P 500, you wouldn't know, but it moves essentially to $25 strikes. We gapped up at 2 o'clock to 66.25. Then what did we do? We gapped all the way down 65.75. Hell, even lower than that. All the way back up. Where did we close? Let me drop the in there. 6,600. We dropped the line right there. Now it looks normal. So we went into the Fed decision and press. This is Jerome Powell talking here, right? That's the press conference. We closed literally where we went in. Now, if you're like me, this could have been Sniper Alley, right? You could have taken some, I call them snipers, S&P 500 sniper shots here. Very, you got to be on your game, man. You got to be good. I'm good. But I sat on my hands just because I couldn't watch all this and listen to him. It was one of the, well, we'll get to that in a second. Then what happened today? Okay. Well, let me draw more. Let me drop my more 25 lines in here, up at a 50. Anybody see a trend here? We gapped open today to a 25, went up through that one, and then we faded the rest of the day, almost back to this one. Like I said, well, men lie, trades don't. Let me just go show you. This is called our Hunters Group, our Hunters Investment Club. Where's my trade alert? Right here. It's a 30-minute bear call spread. Shot a bear call spread just above 66.50. I was up at 66.60. $1.35. I got out 55% profit, $1,100 in 30 minutes. Then I went to the beach here in Boca. That's how I do things, man. That was beautiful sniper shot. S&P 500 went up and then faded as I thought it would. Beautiful sniper shot. So where do we go from here? Let's debrief what happened. Let's step through this stuff. Fed lowers rates by a quarter point, signals more cuts are likely. Now, I'm going to go to something that I usually don't do. Let me do this. I'm going to launch this poll. Everybody take a look at this poll. Your take on the Fed yesterday. Let your fellow TGO members, or if you're not a TGO member, you will be by the end of this brief. What's your take? It was a hawkish cut, Wiz. Meaning, here's your 25, and we don't know, man. I don't know if you're getting any more. Dovish cut. Here's your 25, and man, there's a lot more coming. Porridge. What's porridge? Jerome Powell is usually porridge. Not too hot, not too cold. It's a lot of words and nothing. So was it porridge? Or choice D, they're clueless. So everybody vote. We got about 50% of people who have voted. Everybody else pay attention. Let the kids run around the living room. Shut the door. Hawkish cut, dovish cut, porridge. Or they're clueless, right? I'll tell you what I think in a second. All right, a couple more seconds. All right, that's way more than half that have answered, so people are paying attention. That's fantastic. All right, I am ending the poll. The correct, I feel like, you ever watch the McLaughlin group with John McLaughlin? McLaughlin? Yeah. It was, Pat Buchanan, Eleanor Clift, Fred the Beetle Barnes. The answer is issue 4. They are clueless, ladies and gentlemen. They are absolutely clueless. If you listen to the press conference, they have no idea what they're doing. Okay, here we go. Let's step through this. He is first of all, he sucks. This is the same guy who for 2 years said inflation was what? Transitory. Do you remember, ladies and gentlemen, 9.1% inflation, the highest inflation in 40 years. I was in high school, a freshman in high school, the last time inflation was that bad. Kamala, Joe, it's the Putin inflation because of the Ukraine invasion. What? It's the COVID. It's supply chain issue. It was everything but insane government spending and the Fed printing money out of thin air. So Jerome Powell, with a straight face, ladies and gentlemen, for 2 years, so did Janet Yellen and the president, Treasury Secretary Yellen, who was the last Fed chief, who sucked too. Transitory. 2 years later, Jerome Powell, under oath, had to finally admit, like, we got that wrong and should probably stop using the word transitory. I feel like Bruce Willis in Nakatomi Plaza, right? Welcome to the party, pal. Literally, pal. Pal, welcome to the party, pal. So he's an idiot, folks. Your job, you have two jobs, Mr. Chairman: price stability and full employment. Did you see the past two jobs reports, Chairman Powell? How about price stability? Inflation is ticking up. So he's in a awful place. The horrific jobs numbers, folks, gives us stag. Inflation going up and staying at 2.9% last week gives us inflation. How many of you have heard the words stagflation? We're in it. And him cutting rates in this environment could be absolutely horrific. The bond market wasn't responding the way it should with a 25-point cut today, folks. That's not good. Okay. And of course, the Wall Street Journal, the New York Times, it's Trump's Federal Reserve now. The president got his interest rate cut and all that comes with it. Okay. His buddy, whatever the guy's name is, the new Fed appointee on there, wanted a 50 cut. What's funny is people, first of all, you need to be a TGO member because I'm smart and I can tell you things like people like, wait, those two people dissented last time. How come they didn't dissent this time? It was only the one Trump guy at a 50. They didn't dissent this time because they got what they wanted. Oh, that's right. The last Fed meeting, they dissented and said, we should probably cut 25, and they didn't. This time around, they got their 25. So there was no dissent other than the give me 50 guy who was auditioning to be the new Fed chief. So, folks, the Fed is expecting PCE, personal consumption expenditure, to go up next year. Jerome said, I don't think we're going to get back to our 2% target rate for 3 years. So they're cutting rates even as inflation is expected to rise. Now, listen to me. I'm not some hyper partisan. I was flipping the hell out last September when they cut 50 with inflation going up. I call balls and strikes, man. I ain't no hyper partisan. So they're kind of, like I said, they're in this tough place because they're like, wait a minute, inflation's not where we want it, but we're going to shift to what? The slowing labor market. Did you hear the words that he used yesterday? This is a risk management cut. I don't think I've ever heard that in the history of these Fed press conferences. What? How do you... let me read. He struggled to articulate that was not a good press conference yesterday. He struggled to articulate how monetary policy might make a difference. Neither of the negatives he mentioned, tariffs and the immigration crackdown, again, he's a hyper-partisan, can be offset by lower rates. Otherwise, it's not a bad economy, he allowed. So let me get this straight. Things aren't that bad. Here's your 25. So this is, undeterred, the Fed is shifting into dovish mode with surprising consensus, except for the dude who wanted 50. So, folks, the dot plot shows we're probably going to get 2 more by the end of the year. So listen to me. You trade the market you have, not the one you want. You'll go broke if you're trying to trade the market you want. It's the market we have. So deal with the cards that you dealt. I'm good. I already write my trade journals and stuff like that. When we get to the horrific stagflation in the future, I'm going to go, I told you so. I really don't. Well, let me start with this. I do care. I'm an American. This will end up hurting people. Now let me shift into my Gordon Gekko or Jordan Belfort mode from the Wolf of Wall Street. I don't care. I'm going to physically print money no matter what happens, right? I don't want Americans to get hurt or, blah, 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 but it's bad. Let me read this and then we're going to look at a couple trades. This guy's awesome. The Fed's latest spectacle is not prudent policy, but political theater staged on the public dime. Today's actions resemble a child's tantrum more than sober macroeconomics, a display that undermines the credibility of the central bank pretends to defend. Wow. This wasn't careful stewardship, but theater designed to project control in a climate of uncertainty and high stakes. Do you remember? I forget. I don't know where I put my notes. One of them was like there was a sentence where he mumbled where it was kind of like we're like a little clueless right now type of thing. That's the way it came across. The Fed's posture, measured, cryptic, and performative, reads as a deliberate choice to trade clarity for control, to confuse with complexity rather than illuminate with accountability. Wow. In practice, it yields a policy stance that feels like flashed signaling rather than a durable strategy. Optics over outcomes and appeasement for the progressive left cause over real economic stabilization. This was good. This was really good. Now, at the end of the day, ladies and gentlemen, let me give you my summary. Even because as your flight instructor here, I'm first going to point out all the threats. It's easy for me to transition to the next phase of this brief, which is going to be even more awesome. But I got to brief you on the threats, man. The mission objective is to make money. What are the threats to making money? Well, this blows up in our face. Let me remind you of rule number one in investing, folks. This is one of the biggest wizisms you'll learn here at Top Gun Options. The market is not the economy. Give me a vertical head nod to show that you understand this. Ladies and gentlemen, that's a 6-month chart 6-month chart of the S&P 500. That is not the economy. 911,000 jobs just disappeared, or they were never there. Fudging jobs numbers to influence an election is a crime. It's a felony, technically. That lady should be indicted. But ladies and gentlemen, as the S&P 500 does this, the macroeconomic data are kind of like that. I have seen numerous times in my career the market going up and the macroeconomic indicators going down. Usually that gap between the two meets, and it's usually ugly, a bear market, a potential recession, okay? So write this stuff down, man, because it's wisdom, so to speak. The market's not the economy, folks. And if you're new to investing or trading, let me hit you with this one, because this will blow your mind if you don't know what you're doing. The worse the economy gets, the better the stock market most likely will do. Okay, nope, I don't believe you. I've been doing this for 35 years, folks. Trust me. Up until 2008, you were right. Stop living in the past, man. Live in the present. 2008, I was in the Board of Trade. I was in the SIBO, the Chicago Board Options Exchange. I was at ground zero for the global financial crisis. At the Options News Network desk, the media company I started, I said, don't do it, George Bush Jr. Don't jump in to save capitalism. Don't do it. But Paulson, the former head of Goldman Sachs, who was his Treasury Secretary, convinced Bush, if we don't jump in to save capitalism, banks will fail, bankers jumping out windows, it'll make, the stock market crash of 20 whatever look fun. If you're a C student who did coke and got DUIs and went, to Yale or Harvard, You listen to your Treasury Secretary. He failed. Ever since, and then Obama and Bernanke, we failed in 2008, folks. Things should have been able to break and fail. I don't care if AIG went out of business or Goldman Sachs. Lehman Brothers and Bear Stearns went out of business and the sun went up, rose the next day. They failed. So 2008 until today, ladies and gentlemen, if we start getting stagflation and the bond market ain't responding, what's going to happen? Say it with me. QE. What's QE, Wiz? Quantitative easing. It's two words that some Wharton MBA made up for printing money. Do you remember QE1, QE2, QE3, Operation Twist, TARP, the Troubled Asset Relief Program? I got troubled assets. Can I get a check? Oh no, we only bail out Wall Street. I remember having to weave my way through Occupy Wall Street protests in front of the Board of Trade. Looking back on it, they were right. What are you talking about too big to fail? I got a couple companies. How come they can't be too big to fail? So ladies and gentlemen, here's what I'm getting at. If things get really, really bad macroeconomically, everybody gets a trophy. This is the new America, man. I love going to hockey tournaments with my kids growing up or Keeley at cheer competitions. If they didn't get first, the medal went in the trash can. I didn't even have to say anything. They always had the Ricky Bobby quote, if you're not first, you're last. But in this country, Wiz, everybody gets a trophy. The market can only go up and to the right. And to be honest with you, folks, that's a self-fulfilling prophecy. Jamie Dimon up in the Hamptons, or David Solomon, the DJ CEO of Goldman Sachs who flies down to live in Miami to DJ. That's a little weird, dude. This is a little Colonel Jessup from A Few Good Men. They need the market to go up. They want the market to go up. When I was up in my firm in Chicago doing research about how to teach options trading to hedge funds, we looked at an average 10,000. We had a data set of 10,000 hedge funds. You know how many traded options? 5%. Everybody else was long only, man. Meaning what? They need up and to the right. So here's what I'm building up to. We will get some sort of bear market in the future. We will start, something bad's going to happen, whatever. Markets are cyclical. Look at that monster run from the Trump. Oh my God, Trump's going to kill us with tariffs. We're all going to die. We bought the hell out of the bottom. One of the trades I'm going to share with you tonight is physically printing money. It's called a bullish on America trade that we did where? Right there. I think it was like April 21st or something. We did a bullish on America trade in the S&P 500, and it hasn't looked back. Okay. Now, after briefing you on the threats, let's talk about the good let's talk about the good out of everything that was bad yesterday. I meditate, folks. If you don't know much about me, run a foundation, run a church now, an entheogenic church. I am present. I try to be present. The market, however, is never present. It is always living where? In the future. In that white. That's how we make money. We project our thoughts forward in space-time so we can place trades today. There isn't a broker on this planet, folks, who lets you trade off the left side of a chart. Hey, starting a new brokerage today. We're just going to let you trade on everything that happened in the past. Doesn't happen, folks. You got to look to the right. However, looking to the past can give us a little bit of an idea of the future. And by the way, not everybody is as centered and chambro as me, right? Flowing robes on the top of the mountain. I would kick my own ass if I turned into that guy. Here's what I'm getting at. Let's look to the past to see what has happened in the case that I just rambled through. We're not within all-time highs. The S&P 500 closed today at the highest in history. I want that to sink in. The S&P 500 closed today at the highest ever. Let's go look at history. When the Fed cuts interest rates within 2% of the market being at all-time highs, we're at an all-time high, the S&P 500 has gone on to finish higher over the next year. How many times, Wiz? All the time. 100%. Unbelievable, ladies and gentlemen. Does everybody, men lie, data don't, unless they lie about the data. Folks, look at this. 100% of the time in the past, then in the next 12 months, how about the next 6 months, Wiz? 73% of the time we're higher. What about just let's go to the end of the year, Wiz? Kwanzaa, Christmas, winter solstice, Hanukkah. 77% of the time. Now let's really talk. How about the next 30 days after a 25 cut within all-time highs? It's a coin flip. Well, that I don't like. I like 100%. Yeah, me too. I don't like 50%. I like 50% because I'm going to print money off of it. So, ladies and gentlemen, we don't have enough time to do it tonight, but I'm going to pick one of them. I can be bipolar, and so can I. We have a bullish on America trade years out into the future that for what was it? Back in April, it was an investment of $2,500 on the S&P 500 where you could make, I'm going to round up, 100 grand. I think it was like 98,900. We have that trade on into the future. So I can show you that one, a new one of those, or something out a month. And I'm gonna steer in a direction after I give you all a choice. This, ladies and gentlemen, might be closer the next 30 days from now. What's that? October 18th. I think between now and October 18th, we implode. Why? Does anybody, can you guys chat? Why people over here in the QA box? Let me turn, can you not chat over here? My bad. Now I just clicked the chat box on. Failure, Wiz. I'm seeing Q&As pop over here. Josh wants a new one. Kimmel is definitely transitory. So, ladies and gentlemen, there's the chat box. I love it. So, ladies and gentlemen, what is happening in the next 2 weeks? Remember, folks, we are a very tactical market. You can be sitting here, meditating, and Trump sends a tweet and the market rips or implodes. Jerome Powell says this, something happens in Ukraine. We are a very tactical market. It's exactly right, Pegger. Ladies and gentlemen, we have a date. Now, today, 2 days ago, the outrage was ever. Today, it's frothing at the mouth about Jimmy Kimmel. Tomorrow, it'll be whatever else. Ladies and gentlemen, in 2 weeks from today is the end of the government fiscal year. Temu Obama, Minority Leader Hakeem Jeffries, and Chuck Schumer, did you just see before I jumped on the air, by a vote of 51-47, 50 Trump judicial appointees were pushed through. Why? Because the Democrats have sat on them for 9 months for the first time in history. So Thune finally grabbed some cojones and said, all right, well, now we're going to have to nuke. So he just nuked them all. I can't stand Schumer. I can't stand that. He's a horrific human being. Anyway, you got it, Preston. Ladies and gentlemen, both of those guys that I just told you about have promised to shut the government down. Whoever just mentioned Obama, you're stealing my thunder, baby, because I loved Barack Hussein Obama. First of all, I love everybody. I love the person I hate the most on this planet. I don't hate anybody. Why would you love the person you hate the most, Wiz? Because they are me. We are all one. God loves the person you hate the most as much as you. So why shouldn't you? Anyway, why did you love Barack Hussein Obama, Wiz? Because we had government shutdowns. Speaker Boehner, Speaker Paul Ryan, two horrific rhinos. Do you remember the government shutdowns? If you weren't trading around that time, let me just give you a little brief here. It was glorious. We Republicans are going to hold Obama's feet to the fire and fiscal restraint. Threat of a government shutdown, the volatility index spikes, the market starts rolling over. Breaking news, the government shut down. S&P 500 is down 2%. The VIX is up 30%. Cha-ching, cha-ching, cha-ching. I would close those trades, printing money on the way up. And then even though I pray to God this would happen, the government would stay shut down. It won't. It didn't. So I'd take profit before John Boehner or Paul Ryan would cave because the Democrats are running commercials of Republicans pushing old ladies off cliffs in wheelchairs, right? Because back then the media just tarred the Republicans no matter what. It's your fault the government shut down. Well, actually, it's not. It is. Things are different. Elon Musk owns X. Everybody's a reporter nowadays. We see truth. We're not listening to your bullshit. Anyway, here's what I'm getting at. Now the shoe is on the other hand, right? Hakeem and Chuck, they've already telegraphed it. Trump, you own the White House, you own the House, and you own the Senate. You don't need any of our votes. We're going to sit here on our hands. We actually do need their votes. So, ladies and gentlemen, that's enough commit criteria, ladies and gentlemen, to what? Government shutdown. Now, I can be 100% wrong. Temu Obama, Schumer, oh, you know what, Mr. President, we just don't want to do that. I mean, Cocaine Mitch, right? Mitch McConnell, when he should have shut down under Joe Biden, we're not going to have a government. Government's going to stay open. That ain't Schumer, man. Mitch McConnell as a minority leader he was somewhat partisan, but he's like, no government shutdown. It's a shit show. It's going to suck. So didn't happen under Biden. What do you think is going to happen under Trump? Unity? Enough with my commit criteria. So I'm going to give you a choice. I'm going to be a benevolent dictator. Do you want a front month trade to protect your bullish long-term positions because you don't know how to protect them because all you think is markets move up and to the right? Or do you want to go out 12 months from now, 12 months, not years and years into the future, a 12-month into the future trade? Okay. Yes. Give us both. Nope. Nope. My wife's cooking steaks and there's football coming on. I'm going to do one of them. And if you join, you will get the other one. Let me scroll up and see all these answers. Yeah, Republicans did cave. People want both of them. Give us both. No. 12 month out, short term. Now, Ron. Now. I love it. Ron Burgundy. I'm going with Ron. We're going now. Here's what's up, Muds. All right, here's what we're going to do. We're going to do now because I agree with that. You join tonight, I'll give you the 12-month out trade. And TGO members, you got the 5-year out S&P 500 trade that's already up hundreds of percent and about 15 grand. I'm going to give you a year from today SPX trade that can also, I almost want to do that one, man. It risks 3 grand to make 100. Nah, we'll do that next week. You got to join tonight. Okay, so here's what we're going to do. Ladies and gentlemen, 2 weeks out into the future, we implode, potentially. Or at least the threat of a government shutdown is going to cause. Let me scroll the chart in here a little bit. Let's do a 3-month. And as you can see, ladies and gentlemen, we've been bouncing off. This green line right there is called the 20-day moving average. Bounce, shorter bounce, not close. So we are due for something like that. Okay. Now, remember, and you're going to have to join to do this because you don't wait for like complete max profit to manage a trade that I'm going to show you. So let's start with this. Wiz, I think you're right. I think in, next week, we're going to know, let me bring up the calendar. We're going to know late next week. They're going to start posturing. Remember, folks, an hour is lifetime in this country and market now. Everything used to be calm. Now my phone buzzes. I'm like, okay, what happened, right? So a week's a world away from now. 2 weeks? 2 weeks from now, I'm going to be in Aspen for the Aspen Flight Academy Gala, doing some flybys with the leaves changing. I'm looking forward to that. But I'm going to be on my phone looking at all this stuff going on. So let's go out to mid-October on this trade. But before I start digging into trades, let me start with a mindset. If you think this is going to happen, Democrats ain't going to give Trump a victory. They want to shut down and cause chaos. We're going to implode. So if you think we're going to go down, what do you also believe? Say it with me. We're not going to go up. So, ladies and gentlemen, on your screen is 2 trades. Why would you just do the we're going to go down trade? You're believing 2 things at the same time. If you believe we're going to go down, you also believe, say it with me, we're not going to go up. Ladies and gentlemen, to me, that equals 2 trades. Does that make sense to you? It should. So let's go out to, let's bring up a chart, an options chain of the S&P 500. Let's go with 16 strikes. Let's go out. What did I say? A month, 18th, middle of October. We slide over on our options chain. If you're sitting here going, dude, I'm brand new to options trading, I don't even know what you're looking at. You're going to join tonight, do options weapons school, get up to speed. And after your 8 sessions of options weapons school, and you're going to be a Jedi master. Welcome aboard. So right now, ladies and gentlemen, the S&P 500 closed at 66.30. Okay, that is called at the money. You see this right in the middle of my screen here, 66.30. I'm going to project my thoughts forward in space and time to October 16th, a month-ish from today. And I'm going to look at something called the at the money straddle. What's that mean? If you didn't know what the S&P is going to be doing on that date, you could buy some puts, right? I'm going to buy some puts, Wiz. I think we might implode. Or you could look at, you know what, Wiz? I think we're going to rip by October 16th. You could buy some at the money calls. What you do to calculate the at the money straddle is add that and add that. And that should give you a total of what the options market is pricing for the S&P 500 to do. Don't have to do the mental math. I used to have to do it in the old days. Let's just use our brokerage platform. Let's scroll out to October 16th. This is a $145 wide at the money straddle, and you have to double that. So, okay, why did my strikes go away? Let's do that one more time. Straddle, sell, October 16. Sometimes it does this. 17, 6, and the prices just went away. I hate when it does this. 66.30. Now I got to scroll. 66.30. Hang with me. 66.30 right there. 66.30. Okay. Best technology in the world. Just ask them. 66. Come on. One more. Whew. There we go. That wasn't right. I was like, that's not 145. It's 182. You double it. So, ladies and gentlemen, grab a pen and write with me. You don't have to. I'll do it. 68.15. You see this? This is called an Elizabeth Warren teepee, right? Pocahontas. The options market is saying with a 73% probability that you see the green triangle here, that it will stay below 68.12. We'll say 68.15. And it'll stay above the left side of the triangle, 64.40. Let's round up. 64.50. 64.50. I'm getting starting points for where I'm going to start placing this trade. Let's just go back and look at this chart. Where was the bottom? 64.50. Let me just draw. Where's the little, ooh, 64.50, folks, was what? That was a lot of chop. It was resistance, support. It was 64.50 was technically significant in the past. And it's also in the future under this, it's in between the 20-day and the 50-day moving average. That's a critical piece of knowledge. Why? Because as you can tell, there's nothing, it's no man's land. It's World War I trench warfare in between those two moving averages. It's a magnet. If I went out a little bit, you'd see violent moves either down or back up to a moving average. There's no life in there. Okay. So that's important to know. 64.50. Okay. The top we've never seen. 68.15's another historic high, right? So there is nothing to look at on the chart. It's all the way up there. So here's what we can start doing. The last thing I'm going to look at real quick is something called max pain. Don't get too wrapped around the axle with it if you don't know what it is. I'm just going to look at something real quick. I don't necessarily have to brief it. I just want to try and get a number real quick. 68, 69.25. No. 4,800. That's obscene. No. 67.75. I'm going to write a couple things down. Don't mind me. 67.75. 64.50. Yeah. Okay. All right. Here we go. Now, what did I tell you? If you think something's going down, you don't think it's going to go up. So let's put a roof. We're going to put a roof on the S&P 500 out to the middle of October. Boom. Let's start at 6,800. The top was 68.15, right? I said that to you. So let's just start right now. Let me find let's just scroll up here. There's 60. And you know what? Well, that sucks. These are $25 wide strikes. So I'm not going to do that. I'm actually going to look at trying to get some, I like $5 wide strikes. Again, you're going to learn all this stuff in your training. Let's go out to the regular October expiration. The strikes will be better. Watch this. 68.15 to the top. If I'm going too fast, I'm doing it on purpose so you join, because I don't go this fast and you'll learn everything. Okay, here we go. This is a perfect strike. I would sell, for now, for demonstration purposes, I'll show you one contract. I'll show you what I do in my model portfolio in a second. I'm going to sell a single October 25, 68.15 call. I already stepped through how I came up with 68.15. That's the roof. The roof is on fire. 68.15, that's me saying it ain't going to be above 68.15 by the middle of October. Well, Wiz, what if you're wrong? Jesus comes back and averts the government shutdown and he's running the country now. Market ripped. Well, I'd love that for that to happen. But we're going to, in case that happens, we're going to buy a 68.20 call. $1.20, ladies and gentlemen. I am selling a bear call spread. This tactic is called a bear call spread. I'm bearish. I'm using calls and the strikes are spread apart. It's a bear call spread. It's also called what? A credit spread. I'm getting paid to do this trade, baby. I'm putting a roof on the top. Now, on your trade, I use kneeboard cards, man, from my fighter pilot days. write this down right now. Maybe eject 240. What? You heard me. Write it down. Maybe eject 240. What do I mean? You're getting paid a credit of $1.20. What do you want to do? You want the $1.20, folks. Well, what happens if the SPX starts going up, Wiz? This credit will start increasing, which is not good. You want it to go to zero. You don't want it to go up. So I write down on my trade card right now, maybe bail out, maybe eject out of this trade at $2.40. I'm a political science major from South Jersey. I need easy checklist math. Double the credit you take in. That is a good rule of thumb on when to potentially eject. Okay. So now I haven't even looked at how much money we could potentially make in this trade, and I'm already talking about when I get out of this thing potentially. I said maybe eject. I didn't say definitely eject. Why? Because if the S&P pops, maybe we put this trade on and something really good happens tomorrow and then super pops. Well, we still have the government shutdown out here potentially. So I'm not going to eject. I'm going to hang in this trade. That's when you become the tick, the trader in command. If it hits your maybe eject point, you have to look at what's going on that day if you are going to eject or not. I'm not going to tell you. Now, the first place I'm going to look when I click analyze right here is the loss. Never look at the gain. You ready? 3, 2, 1. Max potential loss, always look at it first. Well, I failed, Wiz. I looked at profit. You did fail. Don't ever look at profit first. Why not? I'd love to make $120. Do you want to lose 380? No. Well, then why'd you look at that, doofus? Ladies and gentlemen, you always look at your max potential loss first, and then what do? I acknowledge that, Wiz. Check. However you do it, go. I'm okay with that max potential loss. Okay. It should be an amount of money where you ain't staring at the ceiling at night going, I better not take the max loss in this trade. You're doing it wrong. I, in this model portfolio, use a rule of thumb of 5%. In a $100,000 model portfolio, I never want to risk more than 5% on a single trade. That's me. You could be 2.5%, you could be 10%. If you're more than that, you're an idiot. 5%. So, well, let me go with the metrics here. So look underneath this, probability for maximum loss. Using at the money, the market's closed, but using at the money volatility in the options when the market closed, there's a 16% chance of getting your ass kicked. Okay, I acknowledge this, Wiz. Now look at the max profit. Whoa, there's an 83% chance of making the full profit. Yep. And in a bear call spread, ladies and gentlemen, you make money 3 out of 4 ways. That's the current price of the S&P 500, that dotted line. What's one way you make money? S&P goes down. Duh. What's another way? What's the second way you make money? What if it just stays where it is? Wiz, we're just hovering for a month. You make money. Okay, what's the third way I can make money? It can go up. What do you mean it can go up? Yeah, of course it can go up. It just has to stay below that point right there, which is the point called the break even. What's the 1 out of 4 ways I lose money? The S&P 500 rips. But I already briefed you on the previous screen of where you'd maybe eject so you don't take the max loss. Now, for the sake of time, I'm not going to super dig in the rest of the tactics of this trade. There's a Greek called theta, time decay. Right? If you're in Fort Lauderdale having a midlife crisis and you go to the used car Ferrari lot and you give them a briefcase full of 250 grand for that midlife crisis car and you pull out of the parking lot and then your wife calls you and says, take it back, your midlife crisis is over. And you pull back into the dealership and you talk to the guy that took your briefcase full of cash and you're like, oh man, wife, I got to take the car back. Can you buy it back? What's he going to say? Sure, for 150 grand. It has theta, time decay. Whenever you sell something, theta. In this case, we're the car salesman. We love time decay in a credit spread. Does everybody understand? If you don't, you're going to join in about 15 minutes and go do your options weapons school training. Now, I would do in the model portfolio 15 contracts, right? Now, look at the risk. I'm risking around that $5,000 to potentially make 1,800 bucks. Now, me, I'm a little bit more aggressive. I just showed you that the S&P 500 likes round numbers. 6,800, 6,825, 6,850. I wouldn't do this trade. Wiz, I'd do the 6,800 bear call spread. Okay. I'd sell the 6,800 call and buy the 6,805. This is probably closer to $1.40, but it lowered my risk a little bit and potentially can make a little bit more money. Okay. I guarantee you this is closer to about $1.35 credit. We are at the markets. This is one of the reasons I stopped doing night briefs. I'm like, the options prices aren't correct. This one, I guarantee you're risking closer to 5 to make about 2,200 bucks. Okay. So I would do this one, the 6,800, 6,805 for 15 contracts. Okay. Now, I'm not done. I'm making money on this trade. I'm getting paid to put a roof on the market. I took care of the roof of what did I draw? I drew a, hey, Wiz, I think the market's going to go down. Well, I took care of the trade on the roof. Let's take care of the basement trade. I'm going to leave this up here on here because we're just going to add to it. We're going to go buy a put. What did I tell you the bottom was? 64.50. The S&P 500, the left arm of the Pocahontas tent was 64.50. Let's go look all the way down at 64.50. Buying a put, okay, at 64.50. Now, you just probably freaked out a little bit like, whoa, Wiz, I went from getting paid a couple $100 to being out of pocket 3,700. I'm not done yet. But you could be done. Why? This is what I call a burner trade. What do I mean? That's Wiz going down the runway in his F-18, gear up, flaps up. There's the fence at the end of the runway, straight up. This has almost unlimited profit potential. Meaning, if the S&P 500 rolls over and super crashes between now and October, remember, folks, if you're not a TGO member, you don't know this, the middle of September to the middle of October is one of the most violent 30 days of the calendar year. Government shutdown stuff, but a bunch of other seasonality stuff I don't have time to get into. Trust me, I've been doing this for over 3 decades. Okay. So you could be done here. Wiz, I think we super implode. Well, then you do this one. Okay. But again, this might be a little rich. I don't, between us ladies, I don't think we super implode. I think we get a nice pullback here. So what I can do is sell a lower strike put underneath this. And with the put spread, this is called a bear put spread, I go 25 wide, and you will learn this in your training. I'm just giving you a little taste of what we do here. 64.25. Let's go down here, 64.25. Okay, Wiz, now I'm feeling a lot better. I was coming out of pocket $3,700 before. Now it's only $200. You are hedged. If you have a portfolio right now full of long-term bullish positions and you're like, man, I first of all, hope ain't a strategy, but I hope the market doesn't implode like Wiz is talking about. Stop with the hope. Take $195 and hedge your portfolio. I don't call this a hedge. I call this a, say it with me, Tredge. The hell's a Tredge? It's a trade. I don't place a trade unless it's going to make money. I'm not an idiot. A trade, I think, is going to make money. A hedge, I don't mind if it loses. Wait a minute. This guy's teaching me about trading. He just said no. Folks, when I fly in a fighter jet, I'm not pissed when I land that I didn't use the ejection seat. If you own a boat, are you super pissed that the bilge pumps ain't being used? No, that means you don't have water in your boat. So I squeeze those two words and tactics together to call it a Tredge. I'm pretty damn sure this is going to make money. And if it does, it's going to protect all the long-term bullish positions from loss. Let's go look at the metrics. This trade is risking about 700 bucks to make 2,300 bucks. Yeah, now we're talking. This is called a bearish double vertical. It's just two vertical spreads on top of each other with the same strategic mindset. There is a bear call spread that helps pay for the bear put spread. This is a beautiful trade. If you, here's the best thing about options trading. You listen to my whole intro. Dude, you're an idiot. Ain't no government shutdown. We're going to rip in the next month. Do the exact opposite strikes. In the instead of where I have sell, you put buy. Do the exact opposite trade. This is what makes a market. You're an idiot, Wiz. Distinct possibility. We're going to rip. That's what's beautiful about being an options trader. Do the exact opposite of what I'm showing you here right now. I think you're the idiot, but that's okay. That's what makes a market. Okay? So this trade, and let's go. What would you do in the model portfolio, Wiz? Well, what did we look at before? 15 contracts for the bear call spread, right? Whoa, 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 whoa. That just turned it into a credit. I'm getting paid 1,600 bucks now. Let's go look at the risk. Wow. I'm risking 6 to make 4. Huh. I don't know if I super like that. Okay, let's play with some stuff. How about we do something like this? 5 and 5 up in the credit spread. Okay. It's still a credit spread. Let's go look at that. Risking 22 to make 28. No. You can sit here and play with this. How about 2 at the bear put spread down there? This is called a ratio. I'm playing with the ratio in the 2 separate spreads. All right, this one spends 15 bucks. Huh. Spending 15 bucks, folks, to be tredged for a month, to sleep better at night. If you got a ton of bullish positions and you're like, man, this guy's scaring me about a government shutdown, this is a decent looking trade. The most you can, how do you take the max loss in this trade? Rip. You were wrong, Wiz. Jesus came back, booted Trump from office, and the market went to infinity. I'll celebrate that, but the most I could lose is 2,500 bucks. What if it implodes a little bit like you talked about? You make 5. That's a great risk to reward ratio. So, folks, you could sit here and play with this. Let's go 6 and I don't know, 3. You can play with it on your own. This one spends 210. I'm risking 32 to make over 7. You could do all that stuff. Maybe let's go 6 and 2. It turns it into a credit spread if I do something like that, where I'm, this was a beautiful looking one too. So I don't want to spend too much more time going through all those type of things, but because I'll come back and answer some questions. But do you understand the basics here? Again, I'm a political science major. I need drawings. Here it is. You put a roof on. When you put the roof on, you brought in money. It's called a credit spread. What did you do? You went and bought the basement potentially down here. Okay? Does everybody understand that? Wiz, I'm kind of uncertain. Well, then maybe you just do the basement, or maybe just do the top. I tend to tell people to have 3 R's to do a bearish double vertical. What does that mean? Really, really, really. If you're just 1 R, I'm pretty bearish. I'm really bearish, man. Maybe just do the bear put spread. I'm 2 R's. Nah, man, I'm really, really bearish. Okay, maybe do the bear call spread. Nope, I'm 3 R's, baby. 3 R's is usually a double vertical. That hits what I call my ROE, my rules of engagement, my commit criteria. Okay. So, what's going on about the, are we having problems because people don't know options trading? Ladies and gentlemen, This is options 101. The third Friday of every month is what? When regular options expire. The third Friday of October is what? 1, 2, 3. The third Friday of October is October 17th. The trade I am looking at expires when? October 17th. But it is displayed, at least on the E-Trade platform, as what? October 25. When you see a month and a year, that means the third Friday of the month. Some of your platforms might say October 1725. Then it's October 1725. On the E-Trade platform, it says October 25. That does not mean October 25th. Does everybody understand? Pegger, it's a great question, man. And I'm going to answer it like this. How many R's am I? 2.5. I'm almost to 3. I mean, 2.75. There's no Pegger. There's no way in hell I see Hakeem Jeffries and Chuck Schumer going to a microphone on September 30th and going, we're gonna vote for a continuing resolution. I see them at microphones going, Donald Trump, military won't get paid, Medicare, VA hospitals. Won't you think of the children? It's gonna get ugly. So I'm closer to 3 than 2.5. I'd be shocked if we don't have a government shutdown. Now, remember, folks, if that Wiz, you were wrong. There is peace and kumbaya in D.C. Are you high? Maybe it happens. I don't mind if maybe I do this one where I actually got paid $110. If the market rips, I don't mind losing, quote, $2,900. Why? Because I have a shitload of long-term bullish. I got Amazon, SIBO, JP Morgan. I got psychedelic. My portfolio will rip. Ladies and gentlemen, if you look at this trade and go, what an idiot, Wiz, I lost $3,000. You're the idiot. You never lose on a hedge. Oh, I didn't make as much money as I could have. You're awful. You're a horrific and terrible investor if that's all you have to say is, well, yeah, but anyway, I could have made more. You're greedy. Ladies and gentlemen, coming from Chicago, proprietary firms, and they dedicate a massive portion of their portfolio to what? Hedging, or at least the smart firms like us. It's the cost of doing. How many of you bitch and complain every month sitting at your desk writing a check to State Farm or USAA for your auto, home, and life? If you do, you're weird. I don't even know that I'm paying my insurance because it's on auto debit. But I'm glad I have insurance. When my son tests me, Dad, I just got rear-ended. Folks, this is insurance. The hedge part's insurance. I'm pretty damn sure this is going to make money. And ladies and gentlemen, if you're not a TGO member right now, you're a fool. You'll join in a couple of minutes here. But if you've seen some of my videos like this, just made 15 grand on a trip. This is how we do it. Some of the big moves in the market, this is how you capitalize on it. Now, guess what I'm going to do? If you're not a member, you're not going to see it. But guess what we're going to do when this trade is printing money? Close it. And then what am I going to put on? A bullish double vertical. This is what you do for government shutdowns. You get ready for the shit show, and before the dust settles, get ready for the opening. I'd love for it to stay shut down forever. It ain't going to happen. So, technically the end of the fiscal year is the first. That's why I went out a couple weeks, folks, is because, what's her name? What's his name? Scott Bessent. So the Treasury, do you guys remember with the government shutdowns? I mean, technically it's like at midnight at this date, technically, but the Treasury Secretary, they have some Excel sheet stuff. Do you remember these words? Extraordinary measures. I remember Janet Yellen talking like this, Ben Bernanke. because they'll try and get pinned down, right? Like when literally do we shut down? And well, I can kind of move column A to column B. And so, long answer, short question, I don't know. There is technically a math answer or a date answer, midnight on the 30th, but they can always, you guys know, it's stupid. It's a game. It's a shell game. So long answer, short question, I don't know. Technically, there is a date, but then they can shuck and jive and do stuff. Okay. Let me go over here to Q&A. So, folks, on your screen, anonymous attendee, what do you think happens if the Supreme Court says no to tariffs? That's a good one, man. The president and Scott Bessent, when the lower court ruled, they both said what? It doesn't matter. And the Treasury Secretary is like, if we can't do it the way, if the court says no to this way, I got 90 other ways to stick it to them. We might get a knee-jerk reaction pullback. Trump said the same thing. He's like, well, I have other authority under this thing that gives me it for 5 months, and I'll just wait a day and re-hit him with it. So it's academic, man. It's not, because people are stupid. A lot of people are stupid, but people are really stupid. Like, well, if they overrule him, he's going to have to refund all the money and shit like that. It's absolutely impossible that that's going to happen. The Treasury Secretary and the president already, folks, love or hate Trump, I really don't care what you think of him. I think Bessent's incredible. If he runs for president, I'd vote for him. Did you see Kamala Harris today? Oh my God, I can't stand this woman. Tim Walz wasn't my first choice. It was Buttigieg or Mayor Pete. Oh, that guy's really qualified being the mayor of South Bend and a horrific transportation secretary. Do you know why she didn't pick Mayor Pete? The country wasn't ready for a black woman and a gay man. I'm like, are you shitting me? These people, the identity politics in this country. Scott Bessent's he's married to a guy and has a family. I think it's fantastic. Stop foisting your bigotry and hatred on other people. You're projecting. And by the way, Tim Walz he seemed a little gay too. So anyway, join. Here's the link. I smell steak, man, and it's really good. So I'll sit here for a couple more minutes and take some questions. You got to join Full Throttle. Options Weapons School. Let's go look at it right now. This is what it looks like. Under Learning, there's our primary brief every Tuesday at 10, Accelerated Retirement every Wednesday at 10, Solo Amazon, 10 o'clock on Mondays, OWS. Options Weapons School. This is where you learn. You download your workbooks right here, and then you start watching. We take a building block approach. Where does Wiz gather intel? What are the basics of stocks and options? What's his trade plan that he talks through? Session 1. I don't even talk about a call or a put until we get to session 2, session 3. Folks, it is a building block approach. I didn't show up to flight school in Pensacola on day 1 and be like, yeah, that's an F-18. That's an engine. That's a wing. Those are clouds. Building block approach. So Options Weapons School, folks, as soon as you join tonight, go start Options Weapons School session 1 as you're watching Miami get beat tonight. This is worth its weight in gold. OWS, Options Weapons School. You get that as part of being a Full Throttle member. Let me go show you the different levels. $295 is a trial. It's $295 a month to get access to the live trade briefs and that training. Okay? That's for tire kickers. Medium tire kicker, $497 a month. What do you mean medium tire kicker? Because a medium tire kicker gets access to this group called the Hunters. You get an app on your phone where my trade alerts pop up instantly, and you get all of this stuff on your screen available on here. We have 2 threads. I post intel and commentary on this one. Did you see this company? We're going to talk about this next week. Go buy this stock with both hands. Israelis are using lasers. You know how much it costs? $2 to shoot down a Houthi and the Blowfish missile or an Iranian missile. What's Iron Dome cost? 60 grand. Why am I ranting about this? Because I just posted this in here and I just already started looking at this stock. Buy it. If you're long-term bullish on Raytheon, we might have a super threat. Look at this stock, man. I've never even heard of it. It's a $490 stock, folks. It will put the Iron Dome out of business. I'm on a tangent rambling about this to say I just posted this in the Intel and commentary thread. What's the other thread? It's where we post trade alerts. I posted the bear call spread today that made $1,100 in 30 minutes. $1,100 in 30 minutes. Yeah. So I already paid for what? 2 months of the hunters, if you want to test that out, or what? 4 months of full throttle. Well, what's the middle? Well, the middle is if you're ready to get airborne, like right now, you get access to the hunters and everything. If you do this for 12 months, thank you. You're helping my business. Don't do that. Do the middle, $29.95 for a year. You save 50% off of doing this for 12 months. This is where 80-90% of TGO members end up, is $29.85 max. Everybody else is in our elite lifetime group. Let me show you how we're doing month to date. We've been pounding Oracle. In 4 trading days, we're up nearly 9 grand in Oracle. Look at my S&P 500 trades month to date, 14 grand, $22,000 month to date in this portfolio. Where'd you come up with Oracle, Wiz? I haven't traded Oracle in probably about 20 years. But look at the chart and what happened last week. That was stupid pop. Gap up. I dropped the gap right there, and I said I sold a bear call spread and bought a bear put spread, and we made 8 grand. I put on another bear call spread, which is, let's go look at that one right now. Got another bear call spread that's on. I put this on, what, yesterday? I think we did this yesterday. 56% profit, $1,200, and we're pounding Oracle. So you're going to learn how to do all this stuff. I'm bringing that up because all of these trades are placed here in the Hunters group, right there. We got 279 members in the Hunters. So this is what you want to join, folks. Full throttle. Full throttle, Hunters, tire kicker, $497. Just do the annual. Everybody does the annual. This is your trial. There's your trial. Wiz, great brief tonight. I need to see a little bit more. $295. The ultimate gateway drug is solo Amazon. It's only $97. It's on Monday. We only trade Amazon. If you're dipping your toe in the water here, do the solo Amazon. Okay, it's $97. You have to take the upsell. Do not, I'm just going to be cheap and do $97 a month. Great. You need to do the training. It's right there. Check that box. You need Options Weapon School. Don't, because in the live trade briefs, when people are like, hey, how do I do this? What's my answer going to be? Go watch a training. Folks, the live trade briefs are for what? I just answered it. Live trading. I ain't doing that much teaching in the live trade briefs. You're supposed to be doing your training. So I'll do a little bit of training or answer some questions, but I'm not dropping anchor like I did tonight for hour going into a tactic. Go watch the double vertical training. Next question. All right, let me answer some questions. Before you ask, 2 separate services. Full throttle is over here and solo Amazon's for most everybody at TGO is in both. Solo Amazon and full throttle. I call it trading the Death Star. It's literally the only stock you need to own for the rest of your life. It's diversified in and of itself. But if you're just really a tire kicker, $97 a month. Okay. All right. Let me answer questions here. And then thanks, Tony. I appreciate it. There's still people over here in the QA. Justin, will the video be posted anywhere following the ending? The video will be posted right here on this page. Answer live. Done. Let me put this in the chat box. Everybody, the replay will be probably at halftime because I'm going to watch football and eat some steak. I'll post the replay on this page after the recording has rendered. Okay, let me answer a couple more questions. Preston, sorry, I may have missed this. Did you say Amazon training is separate and not part of the elite package? Exactly, Preston. That's our true entry-level service. Solo Amazon, $97. It's its own thing over here. It is separate from Full Throttle, that bigger training patchy? Yes, great question. Most people do both, Preston. But if you're a real tire kicker, only $97 a month. A more serious tire kicker is over here in Full Throttle. But Preston, at 99% of the people end up in the $29.95 right here, Full Throttle. Okay. And I just showed you we made the Oracle trades were from last week, man. We're up 9 grand on just in Oracle. I've traded Oracle in decades, but when I see opportunities, we're going to pound them. Okay, a couple more questions. Love this stuff. Okay, sounds good. Sandeep, nope, no more trades before I leave. You got to join. We already talked about the tariffs. Debbie, I'm with you. The tariff thing, I've never understood, man. Go Bills. All right, Ron. All right, good. A lot of not too many trading questions. I think I answered the rest of that stuff. You want to be in the hunters because you get access to the hunters. It's an app on your phone. You get instant trade alerts. That sniper shot today for $1,100. I got it. I get them on my phone, in and out. So that's where you'd want to, if you want to try stuff for a couple months in the hunters, or just save 50% right out of the gate with the annual. This, you do not get access to the hunters, folks, for only $295 a month. You ain't paying for the hunters. You get the 2 live trade briefs, you get the options weapons school training, you get the manuals and stuff like that. But you got to pay for access to the hunters. It's a little bit more elite service. Okay, so join, and then next week I'm going to show you, because one of the reasons, folks, that we did this trade was what? Well, government shutdown. Well, yeah, of course, government shutdown, but also because of what? 50% of the time when the Fed cuts within all-time highs, the next month is a coin flip. We might implode. Take the government shutdown out of this, we might have imploded or pulled back. Add the government shutdown, and I think that 50% goes up to 75%, okay? Why am I telling you this? Because next week, after you become a member, we're going to put on a 12-month out trade that can make $100,000 with a $3,000 investment today. And I'm not going to do that trade right now because I'm going to go eat dinner and watch football. So Sandeep, join. Okay, guys. Thanks, Pegger. I appreciate that. Vicky, well, I haven't been in long, and I have more than paid for an annual membership. I have learned so much. Thanks. Kudos. Vicky, I thank you for that. I am going to steal Pegger and Vicky's comments right there. I appreciate that. Those were unasked for case studies, folks, so thank you for that. And I'm not going to sit here and show you all the case studies. You'll pay for your membership pretty damn quick. How about that? And I'll leave it at that. All right, guys. Any other questions, concerns? Oh, by the way, smart remarks. You can you can always shoot me an email if you want. Wiz, W-H-I-Z, at topgunoptions.com. But check this out. When you join, you can chat with me over here, man. Derek, Gene, Catherine, Mo, Eric. You always got me, man. Sadly, this thing's joined at my hip or my head. I'll be on the couch watching football tonight, and if somebody's got a question, I'm in there, man. I can answer the question. This is live coaching, essentially. Our hunters and our app. It's good stuff. All right, free brief complete, man. Have a great rest of your night. Like I said, I'll get the replay on the replay page here shortly. All the stuff to join is at the bottom of the replay page as well, so you can scroll down and get your membership here as well. Other than that, have a great rest of your day. Fights on. Namaste and Basi. Basi, which means truth. Wiz out. I'll talk to you guys later. Cheers.